Hi everyone, welcome to yet another webinar offered by TCS in lieu of the upcoming Management Case Study examination. This webinar is structured as a workshop and it will focus on P2 related Q&A. So the session outcomes are firstly to take you through the syllabus overview for P2, and thereafter we will look at a mock examination task to understand how a particular area from P2 can be examined at the MCS. And this will be followed by a Q&A session where you will have the opportunity to raise any questions you have pertaining to the mock discussion or with regard to P2 in general. So before we get started, a reminder on two more webinars that will be happening in the upcoming weeks. So we have a workshop on E2, which will follow the same uh, structure as today's. We will have a mock discussion and we will have a syllabus overview, followed by a Q&A for E2 next week. And then, of course, it will be the final workshop, which will be closer to the examination. All right, first things first, the P2 syllabus overview. So let's go through the mock exam coverage document because we have listed out the key topics from P2, and this also represents the coverage in our materials. So remember, you are looking at advanced management accounting, and first of all, let's start with investment appraisal, a highly tested area in the examination, especially if you look at the investment appraisal technique of NPV. This has been one of the favorites of the examiner. So not only should you know about how an NPV calculation is carried out, but you should also be aware of the challenges that we would face in calculating an NPV. And for those who are sticking to the study plan and who have completed the mocks as per plan so far, be prepared. You have a task on investment appraisal coming up. So please make sure that you're thorough with the concept of NPV, including the challenges of calculating the NPV in a given scenario. You would also be required to know about the internal rate of return, IRR, because it represents a relative return compared to NPV, which is an absolute return. So please make sure you understand the difference and also the fact that these are used in conjunction and not in isolation. Furthermore, payback period, it's a useful tool to ascertain the risk pertaining to an investment. So you should be able to interpret the payback period if given in an attachment. Real options, an area which was tested in the last examination sitting, and we had covered one scenario in the examination as well. And the candidates actually, reached out to us saying that it was helpful. So sometimes students overlook the topic of real options, but it is relevant for the management case study. And under investment appraisal, you could also be examined on sensitivity analysis, also known as what if analysis. Moving on to responsibility centers, we have 4 different types of responsibility centers. You are required to know when each is appropriate and what would be the pros and cons of selecting one over the other. So in today's discussion, we would be focusing on a mock exam task relating to responsibility centers. So we will keep the discussion on responsibility centers for later today. Related to responsibility centers, you could also be tested on performance measures or KPIs. This is a highly examinable area for Trimayr because the prescient sets out the KPIs that are currently being used to evaluate the performance of our salons. And there could be scenarios where you are being required to interpret numbers. And there could also be scenarios where you are being asked to evaluate the existing set of KPIs or to come up with new KPIs. So definitely, there could be scenarios that relate to the given KPIs. And balance scorecard, a holistic approach to performance management. And of course, this was a task that you would have um, encountered in the mock exams as well. And so please make sure you have an understanding of the balanced scorecard approach, which extends the performance measurement beyond financial metrics. Closely connected to balanced scorecard could be the discussion of benchmarking. It's highly relevant for Trimayr because we could be looking at internal benchmarking for Trimayr as well as external benchmarking. Both are relevant and highly useful in the context of the company. And definitely, at least one of the 6 variants would have a task on transfer pricing. And it is not going to be limited to the transfer pricing methods, but you could also be practically tested on the challenges associated with determining an appropriate transfer pricing method. So this is typically an area which is covered in the mock examinations, and we've got you covered as well with regard to transfer pricing. So that's about responsibility centers. And as we move on, cost management, again, a highly relevant area for Trimayr, given the fact that we operate a franchised model. And in addition to that, the examiner has stated that we own 40 salons. So you cannot rule out the possibility of these techniques, because not only do we have franchisees operating under our brand, but we also own and operate 40 salons. And on top of that, we also own and operate the Trimayr Academy, which is, as you might know from the financial analysis, it's not one of the most profitable business units of Trimayr. So definitely there could be some concerns. There could be a variant which would focus on maybe how we could develop the uh, academy side, and this could involve maybe looking at cost aspects as well as looking at revenue increment options. So activity-based management could be relevant, and cost transformation techniques or the CGMA cost transformation model could also be relevant. We've had past exam tasks where the examiner sometimes specified the model CGMA cost transformation model. Sometimes the task simply stated cost transformation techniques. And in a certain instance, the task was completely silent with regard to which model to be applied. So the candidates were expected to identify an appropriate model to manage the costs, and the examiner's answer focused on the CGMA cost transformation model. So many candidates in that particular sitting had missed out on the task because they did not have an appropriate understanding of the CGMA cost transformation model, and therefore in their responses they could not incorporate the CGMA cost transformation model discussion. So valuable marks lost in that particular task. Moreover, target costing. This has also been a popular area in the examination. Target costing could relate to products as well as services. So we cannot rule out the possibility of target costing being tested. And under target costing, remember, you would also be expected to know about value analysis, value engineering, functional analysis, considering the possibility that we could apply this to both products as well as the services that we offer. Customer profitability analysis, CPA, is another useful tool because, as you might know, we operate under 2 segments. We have the pop and sheen segments, and we are targeting different profiles of customers under the 2 different brands. And obviously, the premium branded uh, products or services are likely to be more expensive, and they are likely to have a higher margin, which is the usual case. But you could be given information which contradicts the norm as well, because it's an examination and you could be asked to evaluate further. So remember, identifying the profitability of the customers is important for Trimayr as well. Life cycle costing, it's something which is more useful and relevant for a product. And you may wonder then why, or how is it relevant for Trimayr? Well, don't forget that Trimayr develops and sells own branded hair care products. The article in the attachment highlights that there is scope and there is potential for higher sales of hair care products. So, in the event of vertical integration or in the event of focusing on developing more hair care products under the Trimayr brand, a concept such as life cycle costing becomes highly relevant. Moreover, BPR, business process re-engineering, has been a topic which we've seen in some of the recent sittings. So please make sure you are also aware of the concept of BPR and how it could be applied to different aspects in the case study. Value chain analysis, once again, a topic that many were not aware of until it was tested. It's part of the syllabus, and therefore you should know about the primary as well as the support activities and how those could be impacted under different scenarios. Moving on, quality management techniques. This is something that we've clearly highlighted in our pre-scene analysis as well, because for Trimayr, quality can be considered as one of the critical success factors. We are reputed for offering high quality and innovative styles and services. So it will be vital for us to manage quality in our company. So you could be tested on TQM, total quality management, or you could be even tested maybe a small subtask on Kaizen, continuous improvement, or it could also be quality circles, which was recently tested to the surprise of many. And there is also the possibility of a discussion on costs of quality. So you need to be aware of the conformance and non-conformance costs and how certain incidents could affect the cost of quality report of the company. And moving further, another favorite area of the examiner is pricing strategies. You need to know that there are two approaches to pricing. You could go with the accountant's approach of cost-based pricing strategies, or you could go with a market-based approach where you will consider strategies such as premium pricing, skimming, penetration, and so on. So you need to know about the different pricing strategies, and in a general sense, you should know how sometimes we have to arrive at the appropriate price. So it's not simply about knowing the pricing strategies. And whenever you see a task on pricing strategy, just going and dumping maybe a pricing strategy that you have learned, but it's all about understanding the given subtask and trying to figure out how you can construct an appropriate response for the subtask. This has been a problem. We have been observing it in the mock examinations. In fact, we have scheduled an extra Q&A session because this has been a recurring theme in this session's batch. Students coming up with responses which have no relevance to the particular task. So sometimes students see a familiar word in the subtask, and then they try to reproduce or just dump everything they know about that particular task. Or students are looking at it as, I write whatever I know about this and let the examiner see where they can award me marks. And, if I write something like 3,000, 4,000 words, I will pass. So it's important to write one appropriate point over writing 5 or 6 or 10 inappropriate points. So please make sure when it comes to pricing strategies, read and understand the task very clearly as to what exactly are you expected to do in your answer. Moving on, business risks and mitigation. We've actually covered different scenarios under business risks and mitigation. And sometimes candidates are not aware of the different types of risks. And sometimes they come up with very far-fetched arguments. There are obvious points that you can sometimes pick from the scenario, but there is always a deflection and what we could also term as an exaggeration. So take your time, think and figure out what would be the appropriate or relevant risks in a given context. And candidates are often weak in terms of the mitigation strategies. Most of the time, the mitigation strategies are not practical. So please take your time. If you see a task on business risks, It's going to be a practical task. So don't try to, come up with theoretical responses as to how we would be managing business risks. Moreover, please make sure that you also understand the different categories of business risks, because sometimes the subtask could specify the type of risk that you ought to explain in your answer. So, for instance, we've seen tasks which clearly outline operational risk or product risk or reputational risk for that matter. So, if the task specifies the type of risk that you need to explain, if you move away from that and if you discuss any other business risk, you will not be rewarded under the marking scheme. Your point could be good, but if it has no relevance to the given subtask, unfortunately, you will not be awarded any marks for those discussions. So that is why it is important for you to understand what we mean by the different categories of risks. So in the event it is specified in the subtask, your answer is focused on explaining that particular risk. So please be familiar with the different types of risks, which will also include legal risks, a highly likely scenario for Trimayr, as well as technological and contractual inadequacy risk. And this has also been something the examiner has tested in recent times, because many candidates were unaware of it the first time it was tested. And also be open to questions on stress testing, because it's likely that there can be situations where the business is going through extreme adverse situations, and the business's response to such a situation could be examined in terms of stress testing. So these are some of the key points. Of course, you will know that there are other bullet points that we have not included here, considering the time and space. For instance, if you take market-based pricing strategies, we have about 6-7 pricing strategies that we could highlight. Considering the time constraints, we have highlighted the main headings here, and you need to make sure that under these headings, you go and revise and cover the key points. So that's about the key syllabus topics under P2, and we could move on to the mock discussion. But before that, there's a small announcement. As I mentioned, there will be a special Q&A for students enrolled with us. This will be held on Wednesday, and it will be held in the evening at night time, to make sure that those who are at work will find the time to attend this. It won't extend for more than 30 minutes. This will focus on the most recent mock exams that you have attempted. So mock 2, 3, and even 4 as per the study plan, which you would be completing by this time. And the feedback, we've offered feedback and we've seen some recurring themes. So we just want to make sure that you are absolutely clear as to how you should proceed with the rest of the mock examinations. And we have scheduled this midweek, because we want to make sure before you attempt mock 5, you attend this Q&A session, understand the issues that we have noted in the previous mocks, so that in your mock 5, you don't make these same mistakes. So this is something that we are conducting as an additional workshop, and this is to make sure that you duly proceed with the 2 remaining mocks in the study plan. All right, let's move on to the discussion of the P2 mock examination, and we would be referring to mock number 1, which we have been discussing in the series of webinars so far. So I hope you have some idea about the theme of this mock examination. Remember, it focused on diversification, and we were looking at acquisition strategy to facilitate the diversification. So the scenario continues from there. And so far, we have discussed multiple tasks from this mock examination. You would remember, under answering technique, Nick took you through the discussion of business risks and how they can be mitigated. And as we moved on to section 2, we had a task which we discussed in the F2 webinar. And in today's discussion, we will move on to section 4 and we will discuss the P2 related task from the mock. So let's start with the intro, the background. A month has passed. Trimayr has successfully acquired an 80% stake in G&G, with the remaining 20% being owned by the two founding shareholders of G&G. The existing management team at G&G has been retained. So the acquisition has materialized, and we have been able to acquire a majority stake of 80%. And don't forget, the remaining 20% is with the two founding shareholders of the company. And we are told that the senior financial manager is on leave, and therefore the finance director is directly reaching out to us. This is with regard to a new subsidiary. And as we read the email, we find, I am pleased to inform you that the acquisition of G&G has been successfully concluded. I really appreciate the assistance you and the finance team offered to the board over the past few months. I would appreciate your input on a couple of more matters discussed in the last board meeting in relation to post-acquisition strategy. Please refer to the board meeting minutes I have attached for more details. So we have the reference material, and as you have been doing, let's read through the reference material first before reading through the subtasks. This is an extract from the board minutes. The board considered two important matters pertaining to the post-acquisition strategy of G&G. Firstly, the type of responsibility center G&G should be for internal performance management purposes within the Trimayr Group. The discussion focused on aligning G&G's strategic goals with the broader objectives of the Trimayr Group. So remember, it's a new subsidiary, and it's a responsibility center. And we have to decide how we would classify the responsibility center for internal performance management purposes. And you should be aware that there are 4 types of responsibility centers, and we would have to pick the most appropriate classification for G&G based on the strategic goals and the direction of the subsidiary. Secondly, the CEO suggested that we assemble a team with the task of effectively integrating both companies and to formulate a strategic plan overlooking the medium to long-term future of the subsidiary. The board agreed to discuss further on this in the next meeting. So this is a different scenario, and this relates to the second subtask, which is E2 related, and we could focus on this in the upcoming webinar, or we could even focus on the other subtask that we could discuss from section 1. Remember, we had covered one on business models in section 1. So even that is E2 related, and depending on the preference of the candidates, we would be looking at one of them. And so we haven't discussed section 3 in the webinar series, and please make sure that you go through the answers, and if you have any questions pertaining to this, please do reach out, in particular about the question on WACC, weighted average cost of capital, which relates to F2. All right, let's focus on the subtask related to P2 for discussion. Identify the different types of responsibility centers and evaluate their appropriateness with regard to the classification of G&G within the Trimayr Group. So firstly, you are required to identify the different types of responsibility centers. So this is brought forward knowledge from P2 as well as from your competency framework. You should know that there are 4 types of responsibility centers. and your answer should have covered all four of them. Furthermore, you are required to evaluate. So there's a conjunction here, and you are required to evaluate their appropriateness. In other words, the appropriateness of each of these four different types of responsibility centers with regard to the classification of G and G within the Trimayr group. So your answer would have ideally had at least four subheadings because we are looking at four different responsibility centers. And if you knew about classification of responsibility centers well enough, you would have known that the appropriateness is also influenced by the fact that how much control uh, the division has over its operations. So it's based on the controllability principle that we decide which one of the four is appropriate. So you could have started with a brief introduction, and then you could have discussed about the four different types of responsibility centers. And of course, you could have included a concluding paragraph. And this is a problem that we noted in the mock examinations. We saw that candidates were writing unnecessary introductions and unnecessary conclusions. So an introduction, an opening may be required for certain tasks, but it is not necessary for all the tasks. And the same thing with conclusion. So you have to know how you are to use your time and make sure you construct a response which is worthy of gaining you marks. And I repeat this again, uh, please don't write something and expect marks to be awarded. You have to write something appropriate for you to be able to score marks. And we've seen candidates, trying to, write something and expecting to gain marks, which unfortunately will not work. So please make sure that you make necessary adjustments in your answering technique, especially those who have done mock 3 and received feedback. We would not want to see the same mistakes repeated in mock exam 5. And that's one of the reasons why we are also having this special workshop, because the issues were serious enough that we need to, brief you on the issues that need to be addressed before you attempt the remaining two mocks. All right, let's focus on the answer discussion. And this is a reminder, we develop answer plans, which are answer summaries. And these answer plans are intended to give you an idea as to how you should structure and approach the answer. And these are not alternatives for the suggested answers that you are required to develop. So this is the suggested answers document that you would have received. And you will see that we have constructed a full-fledged answer, points explained in paragraphs. So this is how your final answer should also look. And the reason for highlighting this is some of the responses which came in for mock 3 looked more like the answer plan. Why we also provide an answer plan, candidates sometimes find it difficult to read through this document and figure out, okay, in this paragraph, what is that key point that I should cover in my answer, or I should have covered in my answer. So to help the students decode the suggested answer and understand the key points and be able to use that learning in the actual exam, we provide this set of answer plans or answer summaries. So don't confuse the two. This is to help you with the learning, and this is to show you this is the final outcome that you have to deliver in the examination. Of course, these answers are more detailed. It's more comprehensive, but we don't have anything unnecessary. That much I can tell. So please make sure that you consider these as model answers which you have to emulate in the examination. All right, so with regard to the answer plan, as you would see, we have started with a brief introduction. And whenever you write an introduction, you have to make sure that it is value adding. Simply agreeing with the proposal is not going to earn you marks. Sometimes we've seen candidates rewrite the same thing. For instance, candidates say, it is a welcome move that we have acquired this company and this is going to bring great benefits to Trimayr. Just cut the crap and get to the point. I'm sorry for laying it that way because the answers were extremely disappointing. And it's more disappointing because you have already attempted 2 mock exams. You have watched 2+ hours of master classes where we decode the answers. And still, if you come up with the same mistakes, then it shows that you are deviating from the course requirement. So please make sure that you adjust yourself, and midway through the course, it's good that we identified these issues in mock 3 so that you can rectify them in time to gain a pass in this examination. So we've started with a brief opening, and in the opening we have not tried to write something which is not value adding. But if you look at the suggested answer, what we've clearly said is, look here, there are 4 different types of responsibility centers because we were required to identify. And so there's one sentence which is clearly value adding to the examiner, to the marker. And we are clearly saying the decision with regard to which one of them is appropriate comes down to the controllability principle. So there is no bluff here. There is no unnecessary, response here. We are just focused on writing points that are actually value adding to the marker. So the same is actually found in the answer plan, where we are saying, look here, there are 4 different types of responsibility center, and the guiding factor when determining the appropriate type is controllability. And as you can see, we have the 4 different types of responsibility centers identified and explained. Points explained in paragraphs in the suggested answer, as you will see now. Each center has been explained in a para, and then you will see a brief conclusion towards the end, because the conclusion here is appropriate. So the answer plan is also structured in the same way, where we also include a conclusion to our discussion. All right, so let's now look at the second half of the answer, where we have to focus on the 4 different types of responsibility centers. So let's start with cost center. And a cost center is a business unit where the management has responsibility only for controlling the costs associated with the division. So if we classify a division as a cost center, the management and the divisional manager will have no responsibility for generating revenue, and they will have no responsibility with regard to investments. So investments in assets is not something that they would be responsible for, and they will not have the autonomy to make investment decisions. And they are also not responsible for generating revenues. So we will have KPIs, say for instance, financial KPIs such as cost per unit, or maybe similar KPIs that will be used to track, manage, and control costs associated with the division. So if we opt to classify G and G as a cost center, it is not responsible, it is not appropriate, because G and G, as you know from the discussion, is a chain of salons, and those salons should continue to operate the way they have been operating. And this was, in consideration of diversification strategy. So for those who may not remember the introduction about the company, we were told that it is a leading chain of upmarket full service beauty salons, and they have 28 full service beauty salons under their brand. So this is the company that we own now. And we acquired a chain of companies so that, we will be able to expand and tap into this new market faster. So it is inappropriate to make this new division A cost center because currently it is operating as a revenue as well as profit generating business. So we do not convert this into a cost center. A cost center classification would be appropriate if you have acquired a company which is into maybe manufacturing and the only thing that you do is manufacture. A factory could be considered as a cost center, but not a business which has been successfully generating revenue and profits. So in the answer, we have clearly stated that this is inappropriate because G&G should continue to be responsible for revenue generation. That's basically the whole purpose of the acquisition. Rather than trying to set up uh, the business from scratch, we acquire a company that is already in existence, that has already found its foothold in the market so that it will start contributing towards the top line as well as the bottom line of the group. So a cost center classification is inappropriate. Moving on, a revenue center. Now, if you classify a business unit as a revenue center, the management is responsible only for the generation of revenue. So it would only be sales, and there would be no responsibility to control costs or for investment related decisions. Now, once again, the problem is this is a business which is profit generating, and we will need to hold them accountable for profits, not only for sales revenue. A revenue center classification would be appropriate, say, if you have a divisional um, distribution center or a sales focused center. Some companies will have sales units spread across countries, sometimes spread across continents. And in such a case, they would only be focused on sales. So a revenue center classification is definitely inappropriate for G&G because it is a profit generating business at the moment. And that would mean they should be responsible for managing the costs of operating their salons as well. So the issues with cost center as well as revenue center lead us to the next classification of profit center, which could be considered appropriate to a greater extent. And it would come down to, as we already stated, the controllability. How much control do you want uh, the division to have? So in a profit center, the management is responsible for revenues as well as costs. So the divisional management would be held accountable for the profitability of the division. And in this case, it is appropriate because G&G will be encouraged to maximize profitability while ensuring cost effectiveness. The Trimayr Group's board of directors will set profit targets for the subsidiary, and the subsidiaries management, we were told that we would be retaining the existing management in the question. In the opening itself, we were told that the existing management team at G&G has been retained. So we have retained them with a purpose. We acknowledge that they are capable of running this new subsidiary, which is under our group, profitably. So we don't want to lose the existing management because we believe in them, and we will be setting some profitability targets in absolute terms as well as in relative terms. So we would be having some KPIs percentage related, and we would also be having KPIs which are absolute numbers related. So they would be judged based on profitability, which will encourage them to manage both their costs as well as their revenues, because profit is calculated as revenue minus costs. And the only issue here is if you classify the subsidiary as a profit center, the divisional management will not have the autonomy to make investment decisions. So say, for instance, in the 28 beauty salons, the management feels that they need to make changes with regard to assets, some tangible non-current assets need to be replaced, maybe some machines or maybe some furniture or and so on. They would not have the autonomy to make that decision on their own and to pursue the investment. They will require the approval of the board, the head office, to proceed with the investment in assets. So if you want to also give them autonomy over investment decisions, then you have to go to the fourth and final classification of an investment center. So in an investment center, you give full autonomy and they are completely independent to run their business. And of course, this is what the management would like, because an investment center classification would provide the highest level of autonomy to the existing management. And they would have responsibility over investments as well as profits. So as we say, with great responsibility, with great power comes great responsibility. Not only we give them autonomy, but at the end of the day, we will sit down and ask them, okay, look here, we gave you the autonomy. We allowed you to make investment decisions, but what is your ROI, the return on investment? Have you made investments that are justified in terms of returns? So in an investment center, the widely used KPI is return on investment, because we need to be sure that they are not just investing, but they are investing in a way that they generate returns which will contribute towards higher profitability. So remember, in an investment center, we hold the center accountable not just for profits, returns, but profit on the investments that they have made. So this is what the ROI looks at, return on investment. So we will consider divisional controllable profit. Divisional controllable profit divided by the capital employed in the division. And this will be actually converted to a percentage, and then we will arrive at the ROI. And sometimes candidates misunderstand ROI and ROCE. Remember, ROI is accurate to be used in investment center classifications, in SBU discussions, and ROCE is used when you calculate the same ratio for a company. And ROI is appropriate when you calculate the ratio for a division within the company, and the division must be an investment center. So the arguments for classifying G&G as an investment center would include, firstly, as already noted, the highest level of autonomy. If you want the management, the existing management to perform with highest level of autonomy, then, make it an investment center. And of course, it will encourage motivation, because they will have the autonomy and they will not feel like they are under some new management and they are accountable for each and everything that they do. And this sense of freedom or autonomy can be motivating, and it could translate to better performance. And another advantage for the group is that when you have given the autonomy for the subsidiary to make investment decisions also, it facilitates faster decision making. Because in a market which is trend sensitive or is rapidly changing, if you do not make decisions faster when needed, especially with regard to revenues or say costs or even investments, then you could be late in terms of competing with the other players in the market. So sometimes a faster decision could put you miles ahead of competition. And if you do not give the autonomy, it could lead to what we call as a red tape. So it's a situation where the subsidiary has to put forward a proposal to the group, the Trimayr group, and then the group will have to wait till the board of directors have a meeting. And in the meeting, in an agenda of so many things, this will also be included. And then they will have to consider the proposal coming from subsidiary G&G with regard to new investments. And the problem is the head office, Trimayr Group's board, is so distanced from the subsidiary that they may not really understand the merits of the proposal. So if you give the freedom, it will facilitate faster decision making. And if the freedom is used appropriately, it will definitely benefit the group. But one of the key problems with an investment center classification is that the minority shareholding or the non-controlling interest. So we have an 80-20 ownership, which means 80% of the profits come to us and 20% of the profits go to the remaining shareholders. So if we share the profits 80-20, we should also share the investments 80-20. So there can be a time where the management wants to invest further and they are ready in terms of putting in the funds. But will the minority shareholders be ready to make investments on an 80-20 ratio? That could be a question mark. So we will need to have a clear agreement with the existing shareholders as to the investment center classification and the need for them also to contribute on an 80-20 proportion. So this is a little advanced, and this is something that you may not have even come across in your P2 OTQ examination preparation or in the competency framework, but this is something practical which you need to demonstrate at the management case study level. So having discussed the 4 different options with regard to investment center classifications, we will come to the appropriate classification for Trimayr. This subtask does not require you to recommend. So it's not necessary for you to recommend one of the 4, but sometimes in the examination, you could be required to recommend one with an appropriate justification. So please make sure that you structure your answer in a way that meets the task requirement. And if you were to recommend one, it would come down to either a profit center or an investment center. And in our conclusion also, that is what we have highlighted. Clearly, 2 of them are not appropriate. As simple as that. A cost center classification is out and a revenue center classification is also out. And it's a profit center and investment center that would have to be shortlisted for the decision making. So we are saying that based on the level of autonomy that the Trimayr board ought to give to the management of G&G, we could classify the new division either as a profit center or as an investment center. So that's basically how we have structured the answer. I will open up the session for Q&A. So if you have any questions on this discussion or if you need me to explain any points further, you could raise it in the Q&A session. And also a reminder about the services, the products that we offer, which you could check out in our website. And we have the essential course for students who have demonstrated their competence in the OTQ exams. And then we have the premium course, which offers full syllabus coverage and which is specifically designed for candidates coming through exemptions and candidates who have not sat for examinations such as the P2 examination. So you would benefit if you opt for the premium course because you will have the master classes where we will explain all 5 mock examinations, all the tasks in the mock examinations. So 5 mocks, and that's mock 2 to 6. And each mock examination has 4 sections, and there will be at least 2 tasks. So there is sometimes a misunderstanding among candidates as to what is a task and what is a mock exam. A mock exam is a 3-hour examination. It will include at least 8 tasks. So you are looking at discussion of 8. Sometimes our mocks have more than 8, most of the time. So 10, 12 tasks, which are sometimes referred to as mocks as well by students who don't have a proper understanding about the examination. So if you do not bring this brought forward knowledge of P2, F2, E2, then this is the course that you should be looking at to gain a comprehensive understanding of the three syllabus areas so that you can successfully construct a response in the examination. So coming back to the workshop, it's also something that has turned out to be successful for uh, our candidates in the last sitting. So you can actually check out verified reviews on Trustpilot, and you will see how they were able to make the best use of our services to ensure exam success. All right, let's open up the session for a Q&A, and let me pause the recording to facilitate the discussion. All right, so before we wrap up, another reminder about this special workshop scheduled for students who have enrolled with us. And of course, following that, we will have 2 more webinars as usual, so don't miss out those 2 webinars as well. So thank you once again for tuning in for yet another workshop, and I hope you are aware of the social media channels where you can access our materials. So till the next workshop, thank you and have a great weekend.